What's going on, everyone? Hope you all had an amazing trading week. It is currently February 12th, Sunday, and the chart we're going to look at is February 10th, Friday's price action. And the main lesson of today is just going to be how important it is to draw your trend lines accurately in order to stay on the right side of the market and to know which direction the market is potentially going to go to. So right now we see that on the right side, it is about 6 a.m. Pacific time and 9 a.m. Eastern time, so 30 minutes before market open. So we see this great downtrend followed by a slight break and an uptrend. So there's a few ways that once we sit at our computer, we can draw the trend line. We can either go from the top, draw something like this. That looks pretty accurate. We have several touches on the top, several touches on the bottom. If we draw a midline, then it looks fairly accurate, right? But in reality, imagine that you were trading at around 3 a.m., 4 a.m., which is what we see right here. Does this price action from right here to here really look like a downtrend? What it looks like is just some sort of congestion with breaks out of either side, followed by this short-term uptrend, followed by some more congestion right here. Now I'm just drawing these little mini ranges just to show you what I'm talking about, but this is really what's going on. We have a downtrend followed by a break, new low. So really, we should have technically something as thin as this would even be accurate. Like, in my opinion, I really only follow these thin trend lines, and then when I want to draw a wider term one, that's only to give me a perspective later in the day of how strong something really can be. But as you can see, something like this, obviously not accurate. Something like this, drawing from the lows, could be accurate. Something like this, because it still illustrates we have a downtrend, a break, and a new low, followed by a short-term uptrend, break, new high. We could also start drawing something like this, but because there's no confirmation on the top of the trend line yet, I stay away from drawing anything wide until we have several confirmations, because in my eyes, even in this uptrend, after we had a break and a new low of this downtrend, this uptrend could potentially be over because this was a lot of bullish momentum, followed by congestion and a new high. And the rules with trend lines are that once there's a break and a new extreme, so an uptrend, a break, and a new high, that trend is potentially over, and we see we have another leg up. So once again, we could potentially draw a wide-term trend line like this, a wider trend line, but there's no confirmation on the top side, so it's not accurate. What I see in my eyes is one leg up, a break, new high, and then another leg up. So right now, all I'm focusing on is this trend line, this trend channel. Anything in the past is done for. I'm expecting, now that we had a break of this trend line, I'm expecting a new high. So that can come in the form of a second entry long. And what do we have here? We have a new high here. We have a first entry long, second entry long. Now, a first entry long simply describes when a bar breaks above the one previous to it. So this bar on the right side has a first entry long because it ticked above the one previous to it, and we went lower once again, and all in the same bar we had a second entry long. Now, this is just for, I'm going to mark it as a setup just for the educational purposes, but obviously it's away from the EMA. We only want to take trades that are touching the EMA, preferably. I always avoid trades that are 1 or 2 ticks above the EMA because you can get trapped a lot of the time. This time it worked, but That's just a second entry long. So now, let's go back a little bit to here. This is also a second entry long. So we see a new high here. We have a first entry long and a second entry long because it was the same thing that happened. We went down, we had a first entry and a second entry long. Now in this case, some aggressive traders saw this, and in their eyes, it confirmed a potential uptrend. So this is also an aggressive entry, but it's actually better than the one we just looked at because it's touching the EMA, and all in the same bar. All the people who went short got trapped. And even if we look at this mini downtrend, these two bars went down, we had a break, new low, and then we had a higher low, all in the same bar, trapping the people who went short. But it is pretty congested, so I would avoid that trade as well. So now we have a break and a new high of this leg. And in my eyes, I'm starting to think, okay, we might have some sort of a trading range starting to form. Just because we went from the high of the day, we went to the lows, so it makes sense that traders are going to look to trade to the highs of the day once again. So let's draw our midline and see if we get any action around there. So we have a break and a new high of this short-term uptrend. So we could potentially start looking for a reversal, but we're still around the middle of the trading range, so we want to be extra careful. We have a first entry long. We went down again, second entry long, but we're below the EMA, so we can't take any trade. And here's a second entry long failure, but if we draw our short-term trend, it's really just a break and a new low. So this short-term downtrend is potentially over as well, so we don't want to look for any shorts. And we have that break and new low, but we keep going down. And in this case, I can extend the trend line because there's no gaps. There's no gaps in between all of these bars. So in my eyes, this is still a valid trend. So we have a break of it. We have a first entry short now. And we ended up breaking out. So this is still just technically a break of this short-term downtrend. We're still looking to test a low. And we now have a break of this short-term uptrend and a new high, so this uptrend is potentially over. And we have a new high here. So we had a break, one leg up, two legs up, and now we could potentially see traders look to make a low of this downtrend because we had a break but no new low of it. But also keep in mind that prices are just getting stacked up around these areas as well. So we want to keep an eye because this is the middle of the trading range potentially. We're getting to these highs. We also are thinking we could potentially get to these lows. So we have a new high here, first entry long. We went down, and I think there was news around this time if I'm not mistaken, but we finally reach a new low of that downtrend. So now, once again, there's people who are going to have the trend channel drawn like this. So this can be valid as well because we have several confirmations on the top and we have an overshoot. And an overshoot is when there's so much downward momentum that we overshoot the channel. So we can have our trend channel drawn like this, but just to show you the power of how these thin trend lines are so important, let's just draw something like this. So we have a downtrend, we have a break, and we have two legs to a new low. So we don't even need to draw that wide trend. We know what's happening. We have a break, two legs to a new low. Now, more advanced traders can draw something like this and avoid making it wide and thinking that, okay, this downtrend is valid, we just bounce here, we can still get a new low. But really, if you're going to draw a wide trend line or wide trend channel and you're going to follow that, you have to remember, okay, there's an overshoot. We don't want to take a short setup because we could also overshoot the other side. But I like to just focus on this short-term downtrend because in reality, if you ignore the left side of the chart and you're just looking here, this is obviously just congestion. So where do we expect to see congestion? After a break and a new low. So we have a break and a new low, congestion, and another low, and another leg down to a new low. So in reality, we just have a downtrend, once again, break, new low, congestion, and we fell out the bottom. So now we have a leg up. Let's draw our short-term trend line. So now we're bouncing at these lows. We have a first entry long and second entry long. So once again, first entry long, second entry long, perfect signal bar. We're at these lows and we expect the momentum to continue. We have a break of this uptrend and we kept going higher and higher. So same thinking here. We could extend our trend channel, and in this case, it does look pretty accurate. But once again, let's just only focus on the short-term uptrends. So I'm just going to show you guys, even if you only draw these thin trend channels, it helps you exponentially more than trying to draw wider ones and then thinking, okay, is this over, is this over? But let's keep in mind, when you do have a leg that is this strong, it makes sense that, okay, this might have been just a short-term uptrend, break new high, and a new uptrend started. That's how I'm thinking in my mind. So now we are looking for a new high of this uptrend. So we have a new high, first entry long, we're going down again, second entry long. That is a textbook entry. If we even draw this short-term downtrend, we have one leg, break, new low, downtrend is over, uptrend, still looking for a new high of this, which we get. And now we're at the point of we reached the high of the day. We had a break and a new high of this uptrend. So we are potentially going to reverse or get some congestion. So we have a first entry long, second entry long. So now all the people who are trying to find a wide-term trend who have something like this, which there's only one touch at the top, touches at the bottom, they're going to be like, oh, look, a first entry long, second entry long, let's see if it works. And it failed because we reached, prices went below this signal bar. So the reason it failed is because, I mean, let's see, okay, the bar went from 97.25 to 98.50, so yeah, you would have got stopped out if you're going for 1 point from one tick above this signal bar. But that's why I like to solely focus on these short-term uptrends. We have a break, new high. We're obviously at the top of this range, and like I said earlier, always avoid the signal bars that are 1 or 2 ticks away from the EMA. Those are very tricky and oftentimes lead to failures. And now we just see that we're very congested. So let's draw a mini little congestion. And we have a second entry long right here, actually. First entry long, second entry long, failed breakout. You can mark it as an aggressive entry, but we'd like to fade the breakouts in the direction of the trend. And even though we obviously had an uptrend, in this case, because we're at the top of the trading range, we're expecting to actually go lower. So let's see where prices ended up heading. This trade did work, but eventually, after this congestion, we just had prices going lower and lower. So let's see if we can have a failed second entry long. So all the traders who are thinking to go long after the uptrend is over, after we reach the high of the range, let's see if we get anything. So counting from this new high, we have first entry long, second entry long, failure right there. But once again, we're not touching the EMA, but let's draw our trend channel. So even in this case, a wide trend could be valid, but let's see what happens, because in my eyes, this is a lot more valid than a trend channel like this, because if you look at it, look how little white space there is here, but look how much there is here. So now it's time where, even though it's a weak looking downtrend, because there's so many touches and it fits nicely, we can consider it to be accurate for now at least. Let's extend this trading range. So now we're looking for a second entry short. We have a new low, one leg up, first entry short, and we don't get a second entry short. So now we can draw something like this, but once again, there's a lot of space here. So let's hold off on anything just yet. But let's figure out what's going on here. So we have this downtrend, could be something like this, or it could just be downtrend like that and a break and a new low. Let's have it just be like that for now. So break, new low, and prices start reversing. So now we have new low, first entry short, second entry short, and a potentially a second entry short failure. So let's see if we should even be looking for a second entry short failure. So let's see if we have our uptrend like this, even though there's confirmations at the top, confirmations at the bottom, there's a lot of space here. So in reality, we have this uptrend, break new high, but I don't know if that's accurate as well. But because prices have gone so far, it's really not a second entry short failure. It's really just a new high, first entry long. So we always want to go for the second entry long, which we have right here. So now, if we're just focusing on this short-term uptrend once again, first entry long, second entry long, and that was the trade that worked. So now we have a break and a new high of this uptrend. I'm telling you guys, only focusing on these thin trend lines will keep you on the right side of the market, and so you know where prices are potentially going to head. So now we have a break and new high of this uptrend, and prices start reversing. And remember, price action is literally just interpreting what is going on based on what the bars are doing. So obviously, because there's so many sellers here, that proves that this uptrend was valid. It doesn't prove that this uptrend is valid, even though it looks pretty accurate. Once again, if we're focusing on just the thin trend lines, let's see what prices are going to do. So now, let's at least draw this short-term downtrend, break, no new low yet. So now let's go back. If we had drawn this, even if we had drawn this as an uptrend, we have a break and a new high. So in both cases, price action told us the same thing, but we would have potentially avoided taking any trades in here if we just focus on this thin trend line. And even if we wanted to, like in the case before, because this is a pretty strong leg, even if we wanted to draw this thin trend line, we have a break and a new high of it. So it's really one leg up, two legs up, and now prices can start to potentially reverse, which ends up happening. So now let's draw our thin downtrend. We have one leg up, first entry short, and a second entry short, but there's no good signal bar because technically this would be the signal bar, so no trade there. And also, keep in mind, we still are looking for a new high of this uptrend. And at this point, prices just look congested. We're getting towards the midline once again. And here is a first entry short, second entry short. So if we had drawn this as the downtrend, it's not valid. It technically is an entry because we can consider if we had drawn this downtrend, we're looking for a new low of it. And also, we have to remember that traders who drew this as a trend channel are going to still be looking for a new low because this does look kind of accurate. We have a break of it. We're working lower and lower and lower. Here's a high, here's a lower high, here's a lower high, here's a lower high. So this is more of a context entry, but once again, we have this downtrend. So because price action rules must be followed, not must be, but are followed in most cases, this is also a nice entry. And how you can tell if what your thinking was right is, what did prices do? Prices rocketed down. So it shows that our thinking was correct, that because we kept making lower highs, because this downtrend needed a new low, even though we did have this short-term uptrend, because we're making lower highs, lower highs, lower highs, we're at the EMA, this is a nice trade. So now once again, let's see what prices did. We just kept making lows and lows and lows, but if we drew any sort of downtrend, would have been something like this. So let's see what would have happened if we had this sort of downtrend. Even though there's a lot of gaps here, there's a couple touches, but once again, if we just focus on only the very, very thin trend channels, let's analyze what would have happened. So let's ignore that. Short-term uptrend, break, new high, and finally get another new high. But let's even draw another short-term uptrend of this. So we still need a new high of this short-term uptrend. First entry long, going down. Second entry long. Will that work? It does. It does work for a scalp. Let's see how many points we would have got. So went from 83 to 85.50. So over a 2-point scalp right there. Even if you had a wide trend drawn, it would have been the third touch. But like I said a million times, let's avoid those for now. So now we have congestion. Let's draw that. And prices keep moving up and up and up. So now once again, what this looks like is one leg up, break, new high. Let's see if we can draw any sort of wide term trend. We have something like this, but let's draw congestion here. And then we just have an uptrend like this. So in reality, even with these short-term trends, we can see we have this uptrend, and then we have an overshoot at the top, followed by congestion. So obviously here's a second entry long, first entry long, second entry long, away from the EMA. You want to avoid that trade. Then prices start reversing. We have downtrend, first entry short, second entry short. Would this have worked? Of course, these price action rules work. So now, once again, break a new low. Even if we drew this short-term trend once again, break, new low. And prices just are stalling. And there's really not anything too great after that. Short-term uptrend, break, new high, congestion. Short-term downtrend, break, new low. No real great entries. That's going to wrap up the video. Let me know what you guys think. I appreciate all the support. Peace.